The next biggest winner is brought to you in part by...
Welcome back to Next Biggest Winner. We've got 3 great guests on today. You've already watched our interview with Greg Bowes from Northern Graphite. Up next are Otis Gold, and after that, iPlateco. Otis Gold has 820,000 ounces of gold and is closer to production than most people think. Here to tell us about that story is Craig Lindsay. Craig, welcome to the show.
George, really good to see you. Thanks for having me.
So, you've got 820,000 ounces of gold, which is a big number already, but you think that number will get bigger.
Yeah, I think that the Kilgore Gold Project, which is located in the eastern part of Idaho, has multi-million ounce potential. We are at 820,000 ounces, and it's a really exciting story from an investor perspective because this 820,000 ounces, we've identified an area directly adjacent to that 820,000 ounces that we think has the potential to even double in size. And this area is some of the nicest mineralization that we've ever seen out at Kilgore. We're talking about mineralization that's 120 meters thick, starting 6 meters from surface at a gram per ton. And to give your audience a little bit of an idea of what that means relative to the existing deposit, we're right now, our deposits on average about 50 meters thick and a grade of about 0.6 grams per ton. So this mineralization in this north target area has some really significant growth potential, just given the thicknesses of the intercepts that we're getting out there, the grade, and the near surface nature of the deposit.
That's what I'm talking about. Near surface is a big advantage for people at home. You mentioned earlier 6 meters from surface, which is 18 feet essentially. What kind of advantage is it to you and the company to have all this near surface, opposed to other companies that got to go really deep and incur significant other expenses?
Well, this is an open pit heap leach gold deposit, so it's going to be mined by open pit methodology. And one of the key things you want with an open pit is a low strip ratio. And a strip ratio is basically how much waste rock do you have to move to get to each bit of ore.
Right.
And so our deposit right now, we're looking at about a 1.5 to 1 strip ratio based on our most recent 43-101. And that's very, very attractive, particularly when you're dealing with a bulk tonnage situation where your grades are relatively low. The other thing from a mining perspective that we have going for us out at Kilgore is that we have world-class metallurgy. And when we talk about metallurgy, it's how easy is it to recover the gold from the ore. And in our case, you can recover at an 1.5-inch crush in column leach tests. We get about an 85% recovery in a 90-day period, which is really, really very, very good recovery.
Yeah, for people at home to understand that, when you take out gold, it doesn't come in gold bars. You actually have to find the gold within all the rest of the rock that's there.
Exactly, exactly. So your strip ratios are a big part of our story, and metallurgy is a second part of our story that's really attractive.
Now, the market right now as it stands is not being very friendly to early stage companies, and investor dollars, institutional dollars really want either production ready or near production situations. Where are you guys at right now?
Well, we are what I would refer to as a development stage company. We've got an established resource that's actually appears to be potentially economic at its current stage. And I want to point out that the Kilgore deposit was actually going to go into production in the mid-1990s. One of the previous operators out there was a major North American gold miner known as Echo Bay Mines. And in about 1995, they were going to put Kilgore into production in a $350 gold environment. So it's what we have right now is a much higher gold price, obviously higher costs, higher capital costs, higher operating costs, but still the production economics out there look very, very attractive. And just to answer your question a little bit more specifically, there's a lot of companies out there in our space that want to take 820,000 ounces and turn it into 3 to 5 million ounces or some other much larger number.
Sure.
And really what the market's looking for right now is production stories. And we've got a story that we think right now, instead of spending money on expanding the deposit, we should be spending money on moving this towards production. That's really what our focus is right now.
Do you have a ballpark? Are you able to provide any kind of ballpark estimate how far away you're from something like that?
Likely, based on our development timelines, you're looking at 4 to 5 years to production, which seems like a long time, but in our business, that's a heartbeat.
Yeah, because it's in other words, you're right there. You can see the end of the tunnel.
Exactly.
You've mentioned Idaho a few times, so I want to talk about that because it's not exactly a mining hotbed for most of us and most viewers at home who are used to Nevada, hearing stories about Nevada and Ontario and Quebec. Why Idaho? What's it like to do business there? Is it a friendly pace? Are you going to be able to get environmental approvals? Tell us about the situation in Idaho.
Idaho for us has been fantastic. There's a long history of mining in the state of Idaho. Everything from gold right down to base metals. Talk about current production statistics in the state of Idaho today. Thompson Creek operates in Idaho. It's the world's largest open pit moly mine. Very large open pit phosphate mines in the southeastern portion of the state. Very well known for the Silver Valley up in the northwestern part of the state. So there really is a long history of mining in Idaho. The state is very, very supportive of mining activities. There's been some recent mines that have been permitted in the state. And so we have actually had a very, very positive reception in Idaho. And from a permitting point of view, we're very, very comfortable with the state, with the regulatory folks that we're dealing with, and about the potential to.
I'm not so concerned about what's going on today. You look 4 or 5 years down the road, gold looks like it's going to be in good shape. And I look forward to talking to you more about it at the round table at the end. Thanks for being here, Craig.
George, thank you very much for having me. Appreciate it.
iPlayco designs and manufactures custom indoor playgrounds and structures. May sound like fun, but serious business. The company's Q2 revenues were $3.2 million, and they just announced 2 new sales agreements for $2.3 million. With us, Max Laskowski, CFO of the company.
Pleasure to be here.
Max, welcome to the show.
Thank you.
Tell me a little bit, and everyone at home, about iPlayco's products so they can get a real feel and understanding for what it is that you're building.
Well, typically people will think of playgrounds as something they see in the schoolyard or in a mall or that kind of thing. There are all kinds of different sizes. And it is a very big industry in the sense that some people specialize in outdoor stuff, some people specialize in indoor. So really the sky's the limit as to the type and size of structure that you can design. And what we typically do is the larger indoor playground structures that will go into malls, that can go into hospitals and schools, et cetera.
All right, that's interesting. So it sounds like you're building for people at home for swing sets and things like that. You're doing those big structures that we see at big commercial places.
Correct. It's a commercial market that we're targeting. We don't do any residential.
So I mentioned your revenue numbers in the intro there, but on an earnings basis, you guys are actually announcing positive earnings per share on a quarterly and annual basis. Is that going to maintain itself, or are you possibly at risk with a slowdown in the Canadian economy? And what do you have to say about that?
Well, thankfully, we sell internationally, and most of our markets are international. We, in fact, sell very little to Canada. Obviously, would like to increase that. But U.S. being our dominant market, however, since the company's inception 14 years ago, we've sold to over 40 countries worldwide. So there are huge markets out there, particularly right now the Middle East is very hot. They have huge malls and want to keep their customers in their malls, so they are investing heavily in these very large play structures to attract people. So yeah, we've done 3 cents a share last fiscal year, 3 cents in our first quarter, 2 cents in our second quarter. So our trailing 4 quarters is 8 cents EPS, and currently we're trading at less than 6 times earnings. So we're pretty excited about that. And the prognosis for the coming year or so is looking quite good.
Let me challenge you a little bit here on one thing, because people might be asking at home. Your international sales, are you working through an agency model where you've got agents in different countries that are selling your products, or are you going the direct route where you have to actually employ, which is typically very expensive to do it on your own? How are you able to achieve these international sales?
You know, it's social media is huge for us.
Really?
The big draw are in 2 areas. We do trade shows globally. So we go to over 24 trade shows around the world. That is a huge draw from us. And the other bit, the social media bit, is huge search engines. People will actually come to us and say, hey, we see that you manufacture play structures, et cetera. Can you give us a design? This is the size of our space. This is what we like. This is kind of the budget we have for something. So it's almost people come to us. That doesn't mean that we don't have salespeople out there. And the model we typically employ is, yes, we do have reps on commission. Some are exclusive, some are non-exclusive that work various territories in the world. We currently divvy it up, the states as various markets. Then we have Asia Pacific and EMA, Europe, Middle East, and Africa, where we have representation. So these are people that are commission based.
Final point. I like the fact that you're manufacturing in Canada. And a lot of companies would take their manufacturing, take it offshore. Why are you manufacturing in Canada?
The biggest reason is for the U.S. market and Western Europe in particular, child safety is paramount. So we need to make sure that every product that we put in meets and exceeds safety standards. And if we do that here, we control the quality process. And that's not to say we don't purchase things from Asian manufacturers, but the bulk of it is done here in Langley, and it's to keep the quality control tight.
Oh, that's good. That's probably reassuring for investors, because it's not as if this is something you can really manufacture cheaply to the lowest bidder somewhere and have, so it's probably good from a competition point of view for you guys as well.
Absolutely. We're not the cheapest in the market, and we won't compete on price because we know that ultimately customers do come back and realize if they buy a cheaper product, the return on investment's not there for them. And not to mention safety issues when it comes to children. You just don't want to go there because the liabilities are potentially huge.
Well, Max, sounds like you guys are running a fantastic company. Congratulations. Congratulations for being a great Canadian company, and look forward to having you in the roundtable.
Thank you very much.
Thanks for being here.
Thank you.
We'll be right back with the roundtable discussion and all of our guests.
The next biggest winner is brought to you in part by